Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I'm going to go through a number of symbols that came through. I got a lot of requests this week, but I like to start the show with a lesson. And today I'm going to focus in on MACD, and inside of that, I want to focus in on the zero line. So let's go ahead and get into this agenda. So I want to show you how the zero line is so important and relevant. I also want to explain what that means, what the zero line is, how it can be used in multiple time frames, but also why MACD is both a trend indicator and a momentum indicator. Once we get through all that, we're going to go through the symbol requests that came through. So let's go ahead and get going with this lesson now. Okay, so the first thing I want to do is make sure we have a clear understanding of what the zero line is. So this is the zero line here going right across the middle. All right, and sometimes I've taken this for granted when I've done videos on the zero line. So I want to be crystal clear about this. What that line represents is where, and what I've done up top is I've actually gotten rid of my 18 and 40 for a minute, and I have put up the 12 exponential moving average and the 26 exponential moving average. And you can see where these lines are crossing. All right, you see, and this is where it tests, but it doesn't cross. Here's where it crosses to the upside. So this black line is the MACD line. Where it's crossing above zero is where the 12 exponential moving average is crossing above the 26. And then you can see it happens to the downside right here. Well, it tests it here. They actually kiss, and then it turns back up, and then we actually get a full-fledged cross here, and then we get another cross to the upside here, and that coincides with this. So a lot of people don't have the 12 and the 26 up, and I don't either. And when I get questions about this, people say, well, why aren't you using the 12, 26 moving averages to go with this to make it be more uniform? The reason is that I don't want it to be uniform. I want it to be an independent indicator. I want the MACD to give me one reading, and then I want my 18 and 40 to give me another reading, and then I want the ADX to give me a separate reading. I want three different, really what I'm trying to do is build a case in my favor. So now that we understand what that zero line actually represents, notice how important this becomes. And the reason why I've always stated I'm looking for trades around the zero line, where the MACD is around the zero line, or where some of the best trades take place. And so let me just go back now and show you. So now I've got the DHI. I've got the weekly chart on the right, which I just had. Now I have my 18 and 40 up. I also have my MACD, and I have the ADX here. And then I've got the daily chart with the same readings, 18 and 40. I've got the MACD, standard MACD. Look, I'm using 12, 26, 9 exponential moving average. I want to make sure you get, I'm doing this right off the rack. It's not anything special, but it is special. And the reason why is there's two different important aspects to MACD. One is it's a trend indicator, but it's also a momentum indicator. Most people look at it as a momentum indicator. I like to look at it as both. All right, where the MACD line is crossing above and below zero is a trend indication because the 12 is crossing above the 26. Okay, I mean, that's a sign of trend shift. And, you can see where the 18 is crossing above the 40. It's really not that significant difference. Most of the time it happens just slightly after because these are a little bit quicker, 12, 26. The exponential lines tend to be a little quicker, but it can be difficult to cross over. You don't get a lot of those crossovers. And if you look at this weekly chart, there's only been a few crossovers since 2020 on the weekly. So what I like to do is when we get a crossover on this time frame taking place here, let's go look at where that is actually taking place on the daily chart. So I've got these, you can see my crosshairs are lined up right here on the daily chart. So let's just make sure you can see that right in this area is where the MACD is crossing over on this time frame. Now, if I'm looking for a signal on this time frame, it was pretty tough. It kind of just took off. Do you see how the first real pullback took place here after the crossover on this time frame. So sometimes you get it right away, and other times you get a really powerful move that kind of shifts the trend, and you don't get a whole lot of a pullback on this time frame. But if you go to this time frame, look at the way this played out. We crossed over the zero line here, and then we immediately got a beautiful pullback. It really was a pinch play. Look at how green DI was starting to kick in, and it was essentially a shift in trend where we had the 1, the 2, and then the 3, and then we got our first higher low. That's taking place right as the MACD is crossing through the zero line, and we're getting a shift on this time frame. So to me, this is truly incorporating the zero line or MACD in on two consecutive time frames and showing the value of the zero line on the higher time frame, but also on the lower time frame. Because when we get pullbacks, so we can go and start to look at the way this plays out. Sometimes we'll get some, overrun on this time frame, but it's not as severe. And we're looking for more of like a second entry pattern when it overruns. Other times we come down and we almost get to the zero line, but we don't completely turn, and then it just takes off. But this is another type of signal we can be looking at the zero line on this time frame. But as long as the black line on the weekly is staying above the zero line, we know we basically have an uptrend on this time frame. Now that doesn't mean it's a strong uptrend, but it's still considered a trend. Now, I like to confirm that with what's going on with the 18 and the 40, with what's going on in the momentum on the ADX, but it is a trend indicator. And then we were looking for momentum conditions to shift by looking at the black line relative to the red line, which is its signal line, or looking at the black line comparing peaks each time it goes up. So by using that in conjunction with the trend indication, the MACD can be pretty powerful. And then if you go and look at it in multiple time frames, look at this pullback, which caused a crossover here, but it's still well above zero. But if we go and look at what's taking place on the daily, you see how violent this this is a trend indication to the downside on the daily chart, but look at how violent it is. You see how violent it broke through instead of just kind of barely coming down. So to me, this is going to take a little bit more time. I can see that looking at the MACD and how violent. So the 12 is coming down really hard through the 26. That's basically what this is telling you. So it's probably going to take a little bit more time to recover and turn things around. So I think if you understand this, it can help why we want to look for ideas and patterns around the zero line when we get those opportunities. We can look for a pullback on the higher time frame near zero and then go to the smaller time frame. And I'll just show you this one more here, this one more example. So look at how this comes down to the zero line here, and we're getting, we're making an ABC to the downside. If you look at what happened on this time frame, we came back up and formed a pinch right as this was turning back up off the low. So that was at $90. That was right here before we got any real indication on this time frame. We hadn't crossed back over anything, right around 90. We're getting a signal on this time frame, but it's right at the zero line on this time frame, and we get a really nice move. So start to understand how to use the zero line in your favor, especially in multiple time frames. All right, let's go ahead and move on to the individual symbols. If you're enjoying the content, hit that like button and also subscribe. And just briefly, my services can be found at rabilstockresearch.com. If you're interested in getting started, you can just start with the book. I am offering at a discount right now in a PDF format. If you go to rabilstockresearch.com/book, you can find out more information on that. Okay, let's start out with the Dow Jones Industrial Average. And by the way, anyone who's interested in getting my analysis on the S&P, on Friday morning, I put on my Invest Like a Pro YouTube channel, I put out a full update on the S&P. I go through the market conditions overall, and then I go through the S&P in multiple time frames. So if you're interested, you can check that out. Okay, so INDU. So here's the thing. When we start to look at momentum, look at what's taken place on a momentum basis on the Dow Jones. So In late July, we got going on the daily chart. We made this push to the upside, and you can see the confirmation of that push with a really strong reading of the blue line, the ADX line. And we know that's based on the buyers because the green line is making this big move above 25, and red is going down. So red are the sellers, green are the buyers, and we're seeing that expand to the upside. That means that's good buying pressure based on this daily time frame. Now, during the decline phase, this drops off because red is really starting to take off. The sellers actually took command a little bit and caused a decent pullback. We actually retraced the entire up move back to the downside. Now, what's really bothering me about this is that even though this made this move to the upside, it didn't spill over onto the weekly chart. So if we look at this weekly, we couldn't even get the green DI to really cross above 25. I mean, it just barely did, and then it dropped right back down below. It's just not a real sign of strength on this time frame. So I think we have to recognize that it's going to start on the hourly chart, and then it's going to spill over and show momentum on this time frame. And if it's strong enough, it'll spill over to this time frame. And then if that gets strong enough, it'll spill over to this time frame. But right now, we've got really low ADX conditions on our main time frames, our monthly and weekly. We don't really have any real strong trend in place on those time frames. I think we're going to need to get back up through this 35,000 mark before we can expect any kind of green DI buyers to really start to show up. The fact is the MACD is just kind of trickling back down below its signal line here after trying to break out and trying to get something going. So I'm more inclined to believe there's more consolidation coming just because we haven't seen any real sign of strength on a ADX basis on the weekly chart. All right, so watch for a move through 3,000. If green DI on the daily chart can break out with a move up through here, then we could start to get our antenna up and expect maybe a little bit more price improvement here. What's interesting is the market's actually having a terrible day, and this is holding up really well. It's more of a defensive index in a way when they're kind of getting away from tech's having a bad day. Then you tend to see some of these other areas play a little bit better. So I think that's what's happening right now. All right, let's look at a couple of these actually more, I guess, ones that would be included in the Dow Jones, but this is one of the stronger ones, right? The industrial sector has been very strong, and we showed a pretty nice move, breakout to the upside with pretty decent movement on an ADX basis. But more recently, we're starting to lose a little strength. The green DI has dropped back down below 25. The MACD is dropping back down below its signal line. And one of the things I really wanted to point out is when we're looking at a pullback on this time frame. So we've got these moving averages rising. We're looking at a pullback, and this goes for any stock or anything like that. We want to go to this time frame and to do the timing. And when we look at the daily, we had overrun here. So my rule from my course, if I get overrun like this, overrun of the zero line, right? And I know that the higher time frame is up, I'm looking for the second signal. So I don't want to take this signal to the upside. I want to wait for this to come down, see if it can test, and on the next move to the upside is where I'd have more interest, meaning the second time you cross MACD, coming back up through the signal line is where I'd have more interest as long as the ADX stays low like this. This is telling us that the sellers are not that strong. So that's what I would be looking for here. But because this came down and dropped back down the moving average like that and recrossed like that, I'm more inclined to want to just use a breakout above this. I don't want to get mixed up in a consolidation pattern in this zone in here. When we don't have any confluence and direction, we're not respecting the moving averages at all. We need to break out back above this prior high before I'd expect anything significant to happen. So that would be kind of my alternative mode when I see this kind of a pullback. I don't want to be too aggressive with a new entry. Okay, look at XLB. So this is another one almost like the Dow, but not quite as strong, where it tried to break out and where we had this move and it just barely got above the breakout level and then immediately reversed. I would consider this a failed new high. It's like it tried to break out and it couldn't hold. And then we've come back and rallied back, and now we're kind of failing at that line again. MACD is rolling back down through, but look at what's going on an ADX basis. On the monthly and the weekly, we have nothing going on here, right? So, I think and this is another situation where we're going to have to get back above on a daily chart because of the way this is retracing. We're going to need to see this make a clear higher low and a higher high to have any interest in this. And we're going to want to see the MACD getting back above and green DI breaking out again. So just a few things to be on the lookout for. Now, what would be very disturbing is a break of the 18 and the 40 week line at $80. If we come back down through that, now we know we're just back into a big trading range, and we have risk back probably down to 75. So definitely something that is of concern that we got to watch out for if there is continued weakness here. Right now, I'm kind of inclined to think it wants to stay between 80 and 85. Okay, I'm actually throwing this in with the indexes because it's about as big as an index. In a lot of cases, it represents such a big part of the market. But I wanted to clarify a few things. So if you've taken my course, you'd say this is really difficult to use as a pivot level for a trend line. So it's hard to draw a trend line like that when you don't really have what I would call a true pivot in place. Now, we obviously pulled back and made a move like that. You could use it, but I'm thinking more that I would use the zigzag in this case. And if you see what happened, the zigzag did not form a higher low here. You see how we didn't have a shift in trend in the zigzag. It just went straight up. But it did go from a new low here and then straight to a new high here. Okay, so that's a sign of strength. That's a bull signal where we go from a new swing low to a new swing high, and then we had all this follow through, and now it's pulled back. Now, a true bull signal will go from a new low to a new high, and then it'll make a higher low and then a higher high, and that'll be the confirming evidence. A move back up through this high would be confirming evidence of a new bull trend in place on this time frame. We don't have that right now because of the way this is dropping. And if we go up and we do this pattern that I just described, and instead of breaking out, we go up and fail, it's a failed breakout. It's almost like a failed bull. And I think a break of this low would be pretty meaningful. So I did want to cover that. I do think this low right here is pretty important to Apple. Okay, if we break that, I think you should expect a longer consolidation pattern. Now, I want to make sure you understand this does not qualify as a 1, 2, 3 to the downside, again, because of the way the trend line formed. I really wouldn't consider that. And the way I confirm that is noticing that if I do take this out, I will not be breaking the 18-month. Okay, so almost always, I wouldn't say it's every time, but almost always you have a really good 1, 2, 3 pattern on this time frame. You're going to break the higher time frame on the higher time frame, in this case a monthly, all right? And that is not happening here. So yes, it's meaningful, this taking out this low, and it's probably going to mean more consolidation, more correction, probably back down to the 18-month line. But I wouldn't consider it the start of a reversal pattern. I think it's more of a correction or what I would call a consolidation pattern in an uptrend right now. But we can see it's pretty important. This key area here. Let me just highlight this right here, right around 175, 174, 173. Definitely something to keep an eye on in Apple. Okay, so I got a couple questions about these India indexes, and one is this Midcap one, and I think this is so important. And I think I wanted to bring this up and talk about it because everybody can get value, even someone who's not interested in the India stocks. Notice the strength in this. We've got a power trend here where the ADX is in a super strong trend. Look at this move on the weekly chart where the ADX is at 62 and rising. But if we look at all the different time frames, the one that catches my eye is this time frame daily. This is the true trend time frame. Look at the parallel nature of the moving averages. We clearly have a a power trend in place. But the point I want to make here, the question was, do I want to keep playing this, or should I? What would I do? And what I would tell you is, as long as it stays in this sequential wave like this, where it's continuing to move up in an orderly fashion and not breaking away from the 18, then I think you can keep playing pullbacks. But the moment this starts to break away and break through that to the upside, then you're going to see this 18 start to rise at a faster rate than this. And now we're looking at some kind of a surging market phase or a climax phase. And then I would not be playing pullback. So if it can pull back right now pretty soon here in the next day or two, then you're still inside this sort of sequential wave pattern that is still very orderly. And I think you can keep playing it. And this goes for anybody that's interested in playing a really strong trend. You can keep going. I know I like to say in the course I say play the first two, but if it's this perfect of a trend and there's no sign of abnormal activity on a move to the upside, no climax action, this is very, very orderly the way it's moving, we can keep playing it over and over and over again. All right, so kind of be on the lookout for that. Okay, so then if we look at the bigger cap Nifty 50, we got a perfect pullback on the daily chart, on the weekly chart with strong momentum and a pinch play. And then we got an opposing trend trigger, but it did have some overrun here. So be looking for some kind of a little pullback as the next entry signal. Lastly, one more India stock. This is pulling back too much. I think on the weekly it did a little damage. It is kind of qualifying as an undercut and rally, but if we're going to play this as an undercut and rally, you only have room up to here because of what's going on here. So I'd like to have this happening all above the 18 and when we get these undercuts, or at least when it triggers, it's back above the 18. I hope that makes sense. Okay, look at the Canadian Pacific. It had the potential to break out, but look at the breakout pattern. I mean, that's a clear failed new high. By the end of the week, you knew that there was a bit of a problem, no confirmation in ADX basis, and really no confirmation on a MACD basis, didn't make a higher high. So sinking back in and maybe taking out the low of this bar sort of confirms that this was a failed new high, and this needs more time. So no rush to really be here right now. I would be waiting for a second time this comes up through that resistance zone. Okay, PLTR. So the question obviously on this one was before we got this big kind of drop today, was this setting up as a potential buy signal? And in a way it was. So it meets a lot of the criteria from my book and my course. However, there's a couple things, and I talk about this right at the beginning of my course, and that's this big bar. Looking at the bars and look at the volume. You see what happened here? And then the midpoint of this big bar is really important. And if you notice, we rally back up to about the midpoint and we turn down. So when I see that, I'm a little bit more tentative, and I would be looking for more confirmation. And maybe if this made a move back up through here, and then if we did that, then we'd be coming up through the midpoint of that bar. Then I'd have a little bit more interest. But you got to watch the price volume action of these bars. And I just had a feeling this was going to take a little bit longer the way it played out. It took a long time to pull back. It should have pulled back here, and it didn't do that. And sometimes when that happens, it goes through a longer consolidation phase. Now, in the bigger picture, the volume pattern is outstanding here. I mean, this is good. But look at the volume of this decline here. You see that? That's showing up. That's that big red bar here. Look at the volume on this time frame. Very strong. We know that it's going to take a little bit of time. So I would just give this a little bit more breathing room. Don't be in a huge hurry. If we can turn on a dime with huge volume and come back up here, I guess you could consider it, but I would probably play it with a little less volume just based on the way this is set up right now. A little bit less size, I mean. Okay, TFC. So let's just look at it from this standpoint. It is in an area where there's significant support. I mean, this is a big support zone for this. But what's bothering me really really bugging me about this. And we've gotten some of these regional banks to rally. This is just not getting any sign of buyers to step in. Nothing. I mean, it can't really get a pulse rate going. And the fact that's happening is telling me I think there's a problem here. And I think it's not just in TFC. I think there's other big regional banks that aren't getting a bounce. It just seems like there's something wrong. They should be rallying more than they are coming into this big zone. Okay, UNH. So UNH is, if you notice, it's got the 18-month kind of rolling over for the first time, and the MACD is working its way down, working off a serious overbought condition. I think it needs more time. We just rallied up to the zero line, the MACD did, and failed at that. It looks like it's failing at that zero line and turning back to the downside. So I think there's more risk of this coming down and working sideways. And when I look at this pattern, I'm leaning more towards it being a big range now. Something like that developing. So I wouldn't be all that excited about this until we got a really strong up move here with some volume behind it. We've run out of time. Thanks for joining me. My research can be found at rabelstockresearch.com, and my YouTube channel is called Invest Like a Pro. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.